Today, we're going to be talking about two high quality dividend paying stocks that are perfect for buy and hold strategy. Now, these two stocks are considered to be classic picks, which is why, as part of this review, we'll also go through the specific financial metrics that we are interested in and walk you through exactly how we go about analyzing these dividend stocks when it comes to them. Let's get into it. The very first pick is Procter & Gamble, which is available with ticker symbol PG, and it's a consumer staples household product business. Procter & Gamble has a dividend safety score of 99, making it a very safe dividend payer. It has a dividend yield of 2.49, close to 2.5%. And the last time it increased its dividend goes back to April of 2022, where they increased it by 5%. Beta, for investors who might not be as familiar, is a measure of volatility. And the beta of 1 suggests the company has similar level of volatility to that of the overall stock market. In this case, for Procter & Gamble, the beta is only at 0.43, suggesting very low levels of volatility for this stock. Procter & Gamble has a market cap of $350 billion, making it a mega cap size business. It was last traded at the price of $146.67. In terms of the dividend payout ratio for Procter & Gamble, the current payout ratio is at 61%, and its forward payout ratio is looking at 62%. Both of them are considered low for consumer staples businesses, suggesting Procter & Gamble has a ton of room to continue to pay and increase its dividend. Speaking of increasing and paying dividends, Procter & Gamble is considered to be a Dividend King stock. In fact, a wonderful business that has been paying its dividend for the past 66 years. And in all of those years, they've increased it year after year. Looking at the dividend growth history, in the last 5 years, Procter & Gamble has increased it by 5% per year. And in the past 20 years, they have increased their dividend amounts by 8% annually on average, which suggests a fast dividend growth over that 20-year time horizon. As for the amount of dividend, Procter & Gamble currently pays a total of $3.65 in dividend income, and their dividend is distributed and paid on a quarterly basis. It's paid in the months of February, May, August, and November. As for the timeliness of this stock, their dividend yield is somewhat in line with their own 5-year average. That's a sign that, for the most part, the stock looks to be reasonably valued. The other aspect that we will look into is their forward price to earnings ratio, which you notice it is sitting at 24.7, which is close to their own 5-year average of 23.4. In other words, it seems that the market is currently assessing and rating this stock close to what it has done it in the past 5 years, at least based on this 5-year average. You notice from the graph how that forward price to earnings ratio has changed over time. During the mid 2018, it got a lot lower to hovering around that 16 or so mark, and then it has got much higher to at one point reaching around that 27 mark as well over the past several months. In terms of the price range for the stock, their current price sits somewhat in between their 52-week low price of 132 and 36 and the 52-week high price of $164.21. Next, we're going to take a look at a number of other key financial metrics. The first one that is always of interest for us is the earnings per share. Earnings per share, and especially the adjusted earnings per share, is used to actually see how the business is doing and whether it's able to continuously increase their earning power. Ideally, we would like to see a business that year after year is able to do that and consistently grows that. For Procter & Gamble, with the exception of 2015 and 2016, where for those 2 years they had back-to-back earnings per share declining compared to the year before, since then they have definitely been able to increase their earnings per share by the percentage that you're seeing here. And in the next 12 months, as noticed on the screen, they are estimated to have $5.94 in earnings per share. Next, we're going to take a look at their total sales. And ideally, we'd like to see a company that continues to increase its sales year after year. We see a little bit of that decline for several years. And this other graph that shows sales growth is allowing us to easily see that. You notice compared to the year before, 2013, 14, 15, and 16, they had declining sales. 2017, they were almost stagnant and maintained it compared to the year before. But since 2018, they've been able to turn things around and year after year since then increase their total sales. So as we pointed out, in 2018, they reported $66.8 billion in total sales. And 2022, estimated to have $80.2 billion in total sales. Next, we're going to take a look at the number of outstanding shares. Ideally, for companies, we would like them to buy back their own shares, giving more value to dividend investors. In this case, you notice in the past 10 years how this business has been able to gradually buy back its own shares. Currently, they have 2.54 billion outstanding shares, which is less than the past 10 years, if you notice that. And lastly, we're going to take a look at return on equity, which measures how many dollars of a profit a company earns for every dollar shareholders have invested in the firm. Ideally, we'd like to see for consumer staples this to be beyond more than the threshold of 15%. It has been the case in the past 10 years, with the exceptions of 2 years, 2015 and 2019, where the business didn't hit that. Other than that, right now, in the last 12 months, we are showing 32% return on equity, which is perfect. We're going to take a look at the past stock return for Procter Gamble. Year to date, at the time I'm making this video, the stock is still down by 10%. If you look at the 1 year time frame, we go back 1 year from today's date, and we notice at that point, we are seeing a 2.6 positive percent return. In the past 5 years, we are seeing a cumulative return of close to 59%. And in the past 10 years, we are seeing a cumulative return of almost 119%. If you look at the maximum 30-year return here, go 30 years back in time, we are showing here a return of 1,174% plus return. Just incredible returns there. Now, our second pick for a buy and hold high quality dividend paying stock is no other than Johnson & Johnson, a healthcare and pharmaceutical business with a dividend yield of 2.73%. Johnson & Johnson has a very safe dividend, and it was last increased its dividend back in April of 2022 by 6.6%. From a volatility perspective, Johnson & Johnson stock is even considered less volatile than Procter & Gamble with a beta score of only 0.31. Johnson & Johnson is considered another mega cap size business with $435 billion in market capitalization. Johnson & Johnson's current payout ratio of 43% and forward payout ratio of 45% are both considered low for most companies. They have an incredible history of dividend payment with the past 59 years that they've paid it without any reduction or any stop. And in fact, in all of those years, they've increased their dividend year after year. The last time they increased their dividend was by 6.6% back in April 2022. If you look at the longer term horizon, in the past 5 years, they've increased their dividend by average of 6% per year. And in the past 20 years, they've increased their dividend by average of 9% per year. Looking at the amount of dividend that Johnson & Johnson pays, comes to a total of $4.52 per year. Johnson & Johnson does pay its dividend divided on a quarterly basis, and it's paid in the months of March, June, September, and December. As for the timeliness of the stock, their current dividend yield is about in line, about 5% off of its own 5-year average, which is at 2.61. And their forward price to earnings ratio, which is currently sitting at 16.3, is in line with their own 5-year average of 16.6, all of which suggesting the stock appears to be reasonably valued at this time. Times like this could be good for investors who want to add stocks that are considered perfect buy and hold picks. You can start by adding a smaller position. We don't recommend necessarily buying all your stock picks at the same time, because for all we know, the stock price might change. And in fact, that's the nature of the stock market. The stock prices go up and down over time. So if you have some savings and you want to, let's say, decide buying stock A, B, or C, whatever, based on your research, you may want to do that in stages, and maybe first buy 25% of that funds that you've allocated to buy that particular stock. buy just a quarter of that funds and buy into that. Then maybe about a few weeks in, then you can deploy the rest of your money gradually, perhaps in 25%, 25%, 25%, 25% increment over the next 2, 3, or 4 months. That way, you are able to take advantage of dollar cost averaging. At least if the stock suddenly goes down, you're not going to be kicking yourself. That's one approach. The other approach is if you really, really are a long-term investor and want to just get in and wouldn't worry too much about the temporary decline in the stock price, then you wouldn't have to worry too much about these type of staging in investments. And it's particularly, it could become even more important if your funds that you want to invest into the stock market is not as intensive or great amount of money that you have to worry too much about per se. All right, let us take a look at the earnings per share, how Johnson & Johnson have been able to increase it year after year. As you see here on this graph, they've been nicely able to increase it, with the only exception being in 2020, whereby, as you notice, the earnings per share declined by 7%. The rest of the years, they've been increasing it year after year. A similar story for their sales, and the exception year there was 2015. Other than that, their total sales in terms of their total revenue has been growing nicely, with the last 12 months showing $95.6 billion total sales, which is just incredible. As for return on equity, we are noticing, with the exception of 2017, for all the other years, they've been able to nicely surpass that 10% threshold for most companies, or even the 15%, which we talked about earlier on. And of course, let's take a look at the number of outstanding shares. We are seeing, for the most part, they have decreased their number of outstanding shares with the last 12 months, showing $2.67 billion in outstanding stocks. Johnson & Johnson's year-to-date return is down by about 3.7%. If you look at the one-year return, it's down by close to 5.6%. However, if you zoom out and take a look at the longer-term horizon, in the past 5 years, they have shown their stock to be up by close to 24%. In the past 10 years, the stock is up by close to 144% cumulatively. And in the past 30 years, the stock is up by a cumulative 1,162%. Well, there you have it, folks. A quick look into 2 high-quality dividend stocks that are perfect for dividend investors for a buy and hold strategy. Before I end this video, I want to encourage you to check out our community tab as well on our channel. We do post different information about stock market and polls that you can participate in and put your votes and share your thoughts with us. The last question that we had was from a couple of days ago, where we asked you, what do you think would be the inflation rate according to the consumer price index in the next report that's going to be coming around in September? And we shared with you that the last report from Consumer Price Index showed that the inflation rate had actually rose to 8.5% year over year in July. And based on the votes that we have got 22 votes so far, and we are seeing that 77% of folks who participated believe that the next inflation rate would be somewhere between 7% and 8.5%. With 14% thinking that it's going to be more than 8.5%, and only 9% thinking that the inflation rate is going to cool off much more and come as part of that report to be less than 7%. Be sure to participate in these polls. We have a number of other ones here on our community page, and we would love for you to participate as well in those. As always, if you enjoyed this video and gained something of value from it, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in the stock market, dividend stocks, growth stocks, penny stocks. We also talk about investing in crypto and ways to reach financial freedom. Thank you, and I hope to see you next time.